had to fill that hole. As a matter of fact, we've seen some of the strongest GDP growth that we've seen in decades.
We've seen strong GDP growth in spite of many, but not all, of the members on the right, or my right side of the room, voting for the longest government shutdown in history. Despite that, we have seen extremely strong economic growth.
And if you look at the success, and this doesn't get a lot of attention, but let's make sure that it gets more today. If you look at the success of the Working Families Tax Cut bill, for those folks in blue-collar America, for the folks who are working every single day, sometimes 2 jobs, trying to make sure that their ends meet, when they look at sitting down at the kitchen table, wondering if anyone is paying attention in Washington to the suffering and the challenges around the country in their household, the answer today is absolutely, positively, unequivocally yes. We know that because in the Working Families Tax Cut bill, we saw tips. If you earn tips in America, your taxes went down significantly. Is that an accurate statement?
Yes, sir. No tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans for American-made cars, and every Democrat voted against that and in favor of the largest tax hike in history.
Now, on top of that, because we understand that raising children have never been more expensive, and frankly, if you looked at the attempt of my friends on the left on child care, some of their proposals would have taken child care from average of $15,300 to $29,000 in some of the estimates given by their bill that they wanted to get passed under President Biden. We actually increased the child tax credit to $2,250, $2,200, right? $2,200. So when you compare the two economies and compare the two levels of leadership that we're seeing in great contrast, back-to-back leadership, there's no question that if you're looking for someone focusing on working-class Americans, undeniably, that would be the Trump economy and the Trump administration.
Mr. Chairman, during Joe Biden's tenure, CPI was 4.7% on an annualized basis. Cumulative CPI was 21.5%. There was a loss of real purchasing power for working families. Thus far, we've seen an increase in real wages. CPI for 2025 was 2.7%. And we have seen it fall for the past 3 months to 2.1. And there is an index called Trueflation, which is observed inflation, not measured inflation, which comes with a lag, that just fell below 1%.
Wow. I only have a minute left. I'm holding everyone to the same standard, including myself. So here's my probably not my last question, but I'm getting close to the end. When inflation in 2021 hit 9%, bad or good for the American economy?
Terrible. Terrible for the American economy, terrible for the American people.
Number two, when President Trump has been able to keep inflation under 3%, still heading towards our goal of 2%, much, much better for our economy. And as a result, interest rates have been able to come down consistently.
Yes, we've seen the interest rates come down this year, and the 10-year U.S. Treasury had its best year since 2020, when the bond markets and our G7 colleagues actually had rate hikes. We had rate decreases.
I only have 10 seconds. At the end of the day, home ownership and affordability is more likely now in the Trump economy than it ever would have been under the Biden economy. Ranking member?
Thank you, Mr. Chairman. So for a solid year while he ran for president, Donald Trump promised pretty much every day that he was going to lower costs on day one, if he was elected. Those were his words, not mine. So Secretary Bessent, you are one of the president's top economic advisors. Let's just start with a little truth-telling about the Trump economy 1 year in. Affordability is the top concern for Americans across the country. Donald Trump has called affordability, I want to get this right, a hoax. He's called it a scam. He's called it a con job. You're the Secretary of Treasury. You know the numbers. Is affordability a hoax, a scam, or a con job?
Senator, it may be a bit nuanced for you, but what President Trump is referring to is the media saying that the affordability crisis was generated by this administration when it was you and President Biden who destroyed the buying power of the American people. So there is an affordability crisis, and you were front and center in it.
So let me make sure that I understand. Donald Trump is not saying that affordability, what's happening to families right now, is a hoax?
He is saying that trying to lay the blame at this administration rather than the Biden-Warren economy is a hoax.
Okay, so it all happened before he got it. And everything that's happened since then, nothing is a hoax here.
21.5% cumulative inflation.
Let me just ask about what's happened in the 1 year that Donald Trump has been president. Last week, President Trump said, quote, "We have the groceries going down." Did grocery prices drop in 2025?
Numerous prices have.
Did grocery prices drop in 2025?
Numerous grocery prices have gone down.
I'm sorry, I don't know if you can't hear me. Did grocery prices drop in 2025?
Numerous grocery prices have gone down.
Some of them.
And in fact, we have seen inflation at 2.1% for the past 3 months.
Have you seen the Bureau of Labor Statistics, that is Donald Trump's own Bureau of Labor Statistics numbers, that report that grocery prices were 2.4% higher at the end of 2025 than they were at the end of 2024. Trump's own Department of Agriculture has projected that those prices would climb higher in 2026. And under Donald Trump, families are paying more and more for groceries. So if you're just going to insult people by denying the facts that are out there and tell people they're doing great when they're struggling, I think that's just another way to say you don't have a plan to bring down these prices. You're not willing to admit the failures of the Trump administration.
Senator.
I will ask you a question in just a sec here. It's not just groceries. The numbers from Trump's own economic agency show that Americans are paying more for utility bills, more for health care, more for housing construction. Families aren't fooled by these lies. Mr. Secretary, you owe it to American families to own up what's going on. And Secretary Bessent, I have one more question for you while I have you here. You ran the search for Donald Trump's Fed chair nominee. And Trump promised, quote, "Anyone that disagrees with me will never be Fed chairman." Kevin Warsh got the nod last Friday. And then over the weekend, Donald Trump joked that he would sue Mr. Warsh if he failed to lower interest rates. At least, I think it was a joke. But just in case, this should be an easy one, Mr. Secretary. Can you commit right here and now that Trump's Fed nominee, Kevin Warsh, will not be sued, will not be investigated by the Department of Justice if he doesn't cut interest rates exactly the way that Donald Trump wants?
That is up to the president. Can you commit that you will?
I'm sorry.
Can you commit that you will not hold
that
up?
He won't be sued if he doesn't drop interest rates.
And he
won't be criminally investigated.
The president also made a joke about you that I won't repeat, Senator Warren.
That was the easy
actually, I will.
one.
He said he had reservations.
If this was a joke, why not just say so?
It was a joke, and he made a joke about you too, Senator Warren.
Yes,
got a lot of laughs. Got a lot of laughs.
Yeah.
So I don't know if you want to respond to that.
I do want to respond.
What I can't tell you
the American people
Mr.
are
Warsh
laughing.
is highly qualified.
They're the ones who are struggling with affordability.
Why don't you tell the nation what you told me, that you held up Chair Powell's
Secretary,
renomination?
We're going to move on to the next one. Senator Rounds, the floor is yours.
Thank you, Mr. Chairman. Mr. Secretary, first of all, thanks for being here and for your service to our nation. I'm going to come back in and talk a little bit on the technical side for just a minute. The FSOC's 2025 annual report recommends that its member agencies use the Council's Artificial Intelligence Working Group to identify regulatory impediments to the responsible adoption of AI by financial institutions. From your perspective, what are the biggest impediments today that prevent banks from adopting AI responsibly, especially for compliance, fraud detection, and risk management?
Well, as you know, AI is an exciting and new technology, and there's a great amount of learning to do here. So FSOC, Treasury, the regulatory agencies are working with our private partners to implement in a gradual way robust usage of AI. AI can be a great tool, but AI, we have to also think that AI can be a risk through state and non-state actors. So it is a public-private partnership, and we are pushing very hard across the agencies and at Treasury.
FSOC's report also recognizes that overly complex and subjective supervision, like reliance on vague concepts such as reputational risk, as you mentioned in your opening statement, restricts valuable activities. Given FSOC's push for clearer standards and responsible AI adoption, would a time-limited AI sandbox for financial institutions with clear guardrails help firms test AI tools in a controlled setting while regulators evaluate risks and benefits?
Senator, that is clearly the one very interesting option, and we are considering that moving forward. We'd be happy to work with your staff on that.
I feel very passionate about that part of it. I would look forward to working with your team as well, sir. I'm also just curious. We've talked now, and the discussion will go on and on about how we build the economy and so forth. But I think just for the American public, since they probably don't get an opportunity to just have a back and forth with the Secretary of the Treasury very often, let's talk a little bit about how we really reduce the price of getting a home for an American family. I think a lot of it has to do with bringing down the interest rates that charge in the 30-year mortgage. Can you share with us a little bit, we talked about treasuries, and you mentioned that the rate of treasuries, the cost of treasuries is coming down. Can you share a little bit about what it takes to bring down the price of treasuries with regard to the growth of GDP? And when treasury rates come down, what that does for an average American home buyer who's looking at a 30-year mortgage?
Well, I'd be glad to, Senator, because President Trump is focused on Main Street and not Harvard Square. A mortgage rate is two components. We could say that it is a derivative of the 10-year, but it's really a 7.5-year. And we have seen that decline. And then it is the spread between the 10-year bond and the actual mortgage security. And we have seen that is at multi-year lows. So what we saw in January was the lowest mortgage rates in almost 3 years.
We've got $37 trillion in debt. A lot of the folks back out there saying if you've got that much debt and you're paying interest on it, that competes with folks that want to loan you money on a mortgage. Can you talk about what it means to build GDP and how someone who is looking at laying out bonds and so forth, as you build GDP, what that does and how that impacts a homeowner?
Well, yes, because two things, sir. We brought down the fiscal deficit for the calendar year. So from 2024 to 2025, at 2024, the deficit to GDP, which is a very important number, was 6.97%, highest when we weren't at war or in a recession. We brought it down to 5.4. That was a combination of the holding spending and growing the economy. And as we continue to do that, interest rates will naturally decline, and it pushes the out inflation. What we could see from an MIT study was that the Democrats' spending that was responsible for almost half of the great inflation. The overspending, according to MIT, was responsible for that and penalized American homeowners. So by controlling the budget, growing, and in a responsible way, we will bring down mortgage rates. And I would say that building costs are now down in the year.
Thank you. Thank you, Mr. Chairman.
Yes, sir. Senator Reed.
Thank you, Mr. Chairman. Mr. Secretary, the President announced on January 9th, in his words, quote, effective January 20th, 2026, I, as President of the United States, am calling for a one-year cap on credit card interest rates of 10%. In remarks at the World Economic Forum in Davos, the President further said, quote, the profit margin for credit card companies now exceeds 50%. He also indicated that Americans are paying 28, 30% interest rates. You were one of his top economic advisors, Mr. Secretary. Do you support interest rate caps to improve affordability on credit?
I wholeheartedly support President Trump's policy, and I think that what you've just said would be in direct contrast to what Senator Warren said about this administration favoring the big banks. But those are facts.
Well, I don't think my statement indicates at all what Senator Warren said or meant. I wanted an answer. You gave me one. But let's look at the current situation. We already have legislation that protects service members by putting a 36% cap, not just on credit cards, but all credit relationships. And it protects them from being exploited. And as in my youth, I was a company commander and saw it firsthand. Would it make sense as a first step to provide a 36% interest rate for all Americans, not just service members?
36% doesn't seem like much protection to me, Senator.
Well, it's better than some of the things that are being presented to service members without the rates. These new plans to buy commodities, and sometimes the rates go to 500, and still today, you have entrepreneurs who are charging extraordinary rates, and particularly to vulnerable populations, which I know they don't congregate at Harvard Square, but they also don't hang out in New Haven either. So I think that would be a sound step, Mr. Secretary.
Senator, you haven't seen all of New Haven.
I haven't, but I've seen a lot of it, the parts that you might have missed. The situation at Freddie and Fannie and Freddie is significant. We have significant federal interest financially in Fannie and Freddie. But under the director, Mr. Pulte, these taxpayer-owned assets are no longer in compliance with the law or with stock exchange listing standards. Pulte has appointed himself as director of both boards, even though the law says, quote, the director may not hold any office position or employment in Fannie or Freddie. A majority of the Fannie board has not been determined to be independent. The audit committee is no longer comprised entirely of independent members. And the committee the governance has been sacked by political affiliates. These all are prohibited by law and regulation. So how will you bring them into compliance, Mr. Secretary?
That would be FHFA, not Treasury.
Excuse me. You are one of the largest, or the taxpayers are. You provided them, Treasury did, not you personally, a $200 million billion bailout in 2008, and you have no interest in Fannie or Freddie?
I'm very interested in Fannie and Freddie, and I'm interested in fulfilling the mission to the American people to keep mortgage rates low.
What about following the laws?
So again, you should ask Director Pulte. I do not see I don't think this creates a
Well, all right, you have nothing to do with Fannie and Freddie. Director Pulte has said that you and him are, quote, very aligned, and we meet regularly about the conservatorship. By the way, it's in conservatorship because of Secretary Paulson, your predecessor. According to Fannie and Freddie's annual reports, the companies, quote, continue to rely on financial support from Treasury pursuant to our senior preferred stock purchase agreement, under which taxpayers own 1 million preferred shares and a warrant to purchase up to 80% of their shares. Treasury staff manages those shares and warrants for the taxpayers. Your predecessor, Hank Paulson, placed these companies into conservatorship. So you have the premise or the power to place Fannie and Freddie into conservatorship. I would think that that gives you a little bit of leverage talking to Mr. Pulte about why he's not following the law. You're reneging on responsibilities, Mr. Secretary. And you're also, being the senior person here, your behavior to some of my colleagues is absolutely childish. Thank you.
Thank you, Senator. Good to see him.
Senator Kennedy.
Hello, Mr. Secretary. I'm over here. How are you?
Good.
Mr. Secretary, as you're also head of the IRS, we've had some tough ice storms. Would you and your colleagues consider an extension on allowing to allow people to file taxes a little bit later?
Senator, I've been in touch with the governor. of the great state of Louisiana, and he and I and my staff are working on that. It is traditional to grant
Right.
extensions for events like this.
Good. If Canada came to the United States, well, let me preface this by saying I understand that tariffs have a number of purposes, but the foremost reason for tariffs is to try to stop other countries from taking advantage of us through either their tariffs or trade barriers. If Canada, for example, came to the United States and said, we're going to zero tariffs in the United States. All of them are off on our end. Would you, Mr. President, speaking to our president, go to zero tariffs and then just let Canadian companies and American companies compete on a level playing field?
Absolutely not. As we saw last week, when 2 weeks ago, when Prime Minister Carney went to China, he lowered tariffs on Chinese EVs from 100% to 6%. U.S. has a 100% tariff on Chinese EVs. We couldn't let our northern border be used as a way for Chinese EVs to come into the U.S.
Right, okay. I'm going to lead you a little bit because Senator Scott is a she-bear when it comes to time. The poverty rate, according to the Census Bureau, is 11%, isn't it, in America?
I'll take your word, Senator.
And that's the Census Bureau defines poverty, is it not?
Yes, sir.
Is it not true that the Census Bureau, in defining poverty and determining that our poverty rate is 11%, or 36 million Americans, which makes us look bad, only will consider direct cash payments from the federal government to poor people, such as, let's say, SSI payments or TANF payments?
Correct.
Okay? And isn't it true that the Census Bureau, in determining poverty, doesn't include non-cash payments? It doesn't include Medicaid or food stamps or housing subsidies or refundable tax credits. Isn't that true?
That is correct, Senator.
Yeah. Let me give you an example. Mom, 2 kids, poverty level for her and her kids is $27,000. Mom works part-time, she makes $11,000. According to our Census Bureau, she's poor. She's below the poverty line. But she also receives, she works, I recall I said, makes $11,000 a year. She receives $4,100 in refundable earned income tax credits, $3,400 in refundable child tax credits, which means she gets a check, $9,200 in food stamps, $9,500 in housing subsidies, $900 in utility bill subsidies, $16,000 in Medicaid, $31,000 a year in free school lunches, and $6,000 in TANF payments. If you add that up, that's $64,100 a year, according to math.
I'll believe your arithmetic, Senator.
Okay. But using the Census Bureau's definition of poor, they don't include all these payments. They just include her income and the TANF payment. Does that make sense to you?
No, sir, and you should bring that up with the Commerce Department.
I know, but you've got influence. I know how close you and the Commerce Secretary are. I'm hoping you could bring it up with somebody above.
The president says we're opposites, and I'm tall.
I'm not going to comment on that. Would you talk to the president about this? If you include all cash and non-cash payments, the poverty rate in America is 1%.
That's a good point to end on.
Thank you,
I
Senator.
told you he was a she-bear.
I'm not quite sure for this. Senator Moreno, you and I will talk about the she-bear later. Let's go on to Senator Van Hollen.
Thank you, Mr. Chairman. Mr. Secretary, I think you would agree that the credibility of the Secretary of the Treasury is important, and I want to give you a chance to retract a statement that you made on national TV. Alex Freddie was shot 10 times and killed by federal agents in Minneapolis. The administration, some administration called him a, quote, domestic terrorist. You suggested that Alex Freddie was culpable in his own killing because he had a gun in his waistband holster, which he was licensed to carry. When asked, you said, quote, I'm sorry this gentleman is dead, but, and you went on to say he had a weapon, suggesting that he was culpable in his own killing. So, Mr. Secretary, today, would you like to retract that statement?
I would not. And would you like to express remorse over the death of Ashley Babbitt here in the Capitol?
Oh, I have expressed remorse over that. So I've done that, Mr. Secretary. Mr. Secretary, please don't. So you think I have other questions, but I actually would have expected you to take this opportunity to rephrase your response to that question. So you think the fact that he legally had a gun justified his killing?
I didn't say that at all.
You said, do you think he was culpable, partly to blame in his own killing because he had a gun?
They did not say that.
I'm asking you a question now. Do you believe he was in any way culpable for his own killing because he legally carried a gun?
Again, this is an FSOC hearing.
Yeah.
So,
but you're the Secretary of the Treasury.
Why don't we talk about financial stability and oversight?
I'm happy to, Mr. Secretary, but your credibility is important. And in that response, you really, I think, let down the country because we expect honesty after that kind of terrible tragedy. Let me ask you about FSOC. I'm glad that you've all established a household resilience committee because people are being financially squeezed from every side. And I've got a whole bunch of quotes here from candidate Donald Trump on the campaign trail. Starting the day I take office, I will rapidly drive down prices and we will make America affordable again. It's interesting he used that phrase since he's been making fun of the affordability phrase recently. But I listened to your exchange with Senator Warren, and the facts show very clearly that inflation has not been eliminated, has it?
Well,
right?
It is undesirable to completely eliminate inflation. What is desirable is to get back to the Fed's 2% target. And for the past 3 months, we've been at 2.1%, Senator.
Yeah. No,
So
but
the 21.5% under the Biden administration.
Now, look, Mr. I know how you're playing games. You're doing the aggregate over the Biden administration. The last few months.
And you are.
No, the number 2.7 is your own number for last year, the year of the Trump administration. So let me ask you.
And you're being a deconstructionist and saying day one.
And great. Well, I'm just reading the president's own statements. I mean, if
I'm glad you all have the same talking
Chairman, I
point.
ask unanimous consent that these statements be placed in the record.
Without objection.
All right. Look, Mr. Secretary, you used to believe that tariffs would increase inflation and prices. Isn't that true?
I wrote that in a letter to my investors, but a year before, I also wrote that I thought Senator Warren would be the Democratic presidential nominee.
Okay. But,
So
Mr.
my
Secretary, please.
predictions have been bad.
Please.
Have been bad.
Okay.
So,
Mr. Secretary, it was January 2024. You said that increased tariffs would raise prices.
no,
right?
I said they could, and I also said it would strengthen the dollar, and the opposite has happened. The
So-
prices have not gone up due to 150 years of data from the San Francisco Fed.
Mr. Secretary, you're
we-
cherry picking. You're cherry picking numbers.
As
It
are-
is a
as are you.
fact that prices continue to go up.
And
I
that-
understand.
that is
Mr.
desirable over the long term.
I understand that you said just at this hearing that building costs are down. I just want to point out for the record that the National Association of Home Builders said on January 29th, not very long ago, that costs are up. Construction costs account for about 65% of average home prices in 2024. And they say, and I'm quoting, record high for construction costs since the inception of the series in 1998. Not the Biden administration, 1998. Thank you, Mr. Chairman.
Yes,
Is that
sir.
a 2024 number?
Senator Haggerty?
This is a number from the home builders. I'm happy to share it with you.
Thank you.
Senator Haggerty?
Thank you, Mr. Chairman. Secretary Bessent, it's always great to have you here.
Good to see you, Senator.
There's not a day that goes by that I don't get someone complimenting on the great work that you and your team are doing at the Department of Treasury. If you'd like an extra moment to respond to Senator Van Hollen, I would be more than welcome to.
No, I think he speaks for himself.
Okay. Well, Secretary, over the years, excessive and misguided regulation have distorted markets and imposed undue cost on the American people. I'm particularly concerned about this dynamic in our banking system. As you and I wrote together in the Wall Street Journal, Dodd-Frank sought to end, quote, too big to fail. But in fact, it created a regulatory environment in which community banks are, quote, too small to succeed. Policy errors have entrenched the dominance of the largest banks and made it even more difficult for community banks, which lack the market-distorting perception of being too big to fail. For smaller banks, the result has been a bloodbath. The U.S. has lost 3,600 community banks since 2010, nearly a 50% decline in the community banks in our state, in our nation. Secretary, I proposed bipartisan legislation to increase the deposit insurance limit for non-interest-bearing transaction accounts. This is not a wholesale increase in the deposit insurance limit. It's a narrow reform targeting only non-interest-bearing accounts, typically payroll accounts. How does this bill, this targeted expansion of coverage, fit into the administration's vision for supporting community banks?
Senator, as you know, I, along with you, am one of the great, and another member of this committee, they are a great advocate of this because what we have seen is depositors, investors believe that large banks have an implicit guarantee on all of their deposits during a time of crisis, during a stress event. As we saw in March of 2023, deposits flee from small banks because they are not believed to have that implicit guarantee. So if we can have an account for which small businesses, normally their payroll accounts, can deposit funds with the surety that they will be returned, then it will stop that deposit beta, allow Main Street to flourish. What we have seen since the great financial crisis, due to overregulation, 50% of community and small banks have disappeared. And that is what is harming Main Street.
Yeah. Well, thank you, Mr. Secretary, and I think that's precisely why the National Association of Community Banks have supported my legislation and the legislation you and I wrote about in the Wall Street Journal. Last year, Mr. Secretary, President Trump signed my bill, the Genius Act, into law. Private sector estimates suggest that stablecoin adoption may reach between $1 trillion and $3 trillion by the end of this decade. As you know, the Genius Act requires stablecoins to be backed by high-quality liquid assets, such as U.S. Treasuries. How does the U.S. leadership in crypto and stablecoins fit into Treasury's strategy for maintaining the dollar's role in the center of the global financial system?
Well, Senator, I want to congratulate you and your colleagues, both sides of the aisle, but thank you for your leadership on this. This can be an important source of funding for the U.S. government as we push down the funding for the U.S. government that helps everyday Americans, whether it is for mortgages, or any other borrowing requirements, keeps taxes low. And we believe that with the U.S. having the safest, soundest, best practices, we can draw in new sources of funding via the stablecoin mechanism.
Mm-hmm. If you think about the impact of the passage of the Genius Act, it was a major statement in terms of keeping innovation on shore. And I'd just like to get your perspective in terms of the stability and clarity that we provided with the Genius Act and what that means for keeping innovative capacity here in America.
Well, it's innovative capacity in digital assets, and remaining the leader in that is imperative. And what we don't want to have are central bank digital assets, which we are seeing in the rest of the world. And Senator, as you and I have often discussed, we are going to see a choice between American private sector assets with our best practices in regulation, or between central bank digital assets, whether in Europe, whether in China, in the rest of the world. And I think the world is going to choose the US dollar and the private sector well-regulated choice that US stablecoins will provide.
Well, I couldn't agree more, and I think that underscores my sensitivity to not undoing ex post facto the good work that we did in Genius. I want to see us put in place international reciprocal regimes that work. I want to increase the demand for U.S. Treasuries as you do, and I'm going to encourage my colleagues to preserve the Genius Act, given all the hard work that went into it. Thank you, Mr. Chairman.
Good. Thank you for your leadership, Senator.
Thank you, Mr. Secretary.
Senator Cortez Masto?
Thank you, Mr. Chairman.
It was a question, but I want to make sure it's right.
Thank you.
Okay, good.
Thank you, Ranking Member. Secretary, thank you for being here. I appreciate your opening comments and your report of the Financial Stability Oversight Council's 2025 annual report. You stated in your opening comments that the Treasury has tirelessly pursued pro-growth policies to unlock the potential available to all Americans when they are free to save, invest, build businesses, and drive their own economic destiny. So let's talk about building businesses under this administration. And this is nothing new to you because we've been talking, and I've been talking to you about this for the last year. In Nevada, travel and tourism are the backbone of our economy. Tourism makes up nearly 30% of Nevada's economy, generating $24.4 billion in total wages. This administration's blanket tariffs and insulting rhetoric towards our closest allies are damaging America's tourism economy. For instance, the U.S. saw 12 straight months of declining visitors from Canada last year. The top international market for Las Vegas, that's roughly a 20% decrease for my state. That is countless dollars, jobs that my state, we are losing, paychecks that won't go to Nevada residents, including the over 400,000 hospitality workers across the state who are dealing with this issue. So my question to you is, will you apologize for driving away visitors and hurting our working families?
A couple of things, Senator. One is the Canadian economy is doing poorly, so perhaps part of that, maybe we should deconstruct why Canadian tourism is down. And two, that it's a choice by the Canadians in terms of where they want to go. And so if you think that should we pull down all of our trade barriers with China so that 1.4 billion people can fill up the hotel rooms in Las Vegas?
So this is the data from the Commerce Department, this administration's Commerce Department on National Travel and Tourism Office. Year-over-year declines in travelers from October 24th to the 25th. It's not just from Canada, it's from Germany, it's from the Netherlands, it's from Australia, it's New Zealand, it's India, it's Vietnam, it's Philippines. We are seeing under this administration a U.S. Travel Association travel forecast that is dealing with now nearly a $70 billion travel trade deficit for 2025. So how do you intend to address the tourism travel issue that we are losing money in this country because of the policies of this administration?
Is overall the occupancy in Las Vegas down or more Americans going?
I'm talking about internationally. It's not just me, it's Florida, it's other states that are dealing with a decline in tourism. And this is my conversation with you for the last year that seems to be this administration keeps ignoring. It is a $1 trillion industry to this country, and you don't seem to think it is important. Let me talk about something else, though. You mentioned, I'll give you an opportunity.
Good.
But you mentioned how you're trying to help my service industry. And I supported this, no tax on tips, because I think more people should keep money in their pocket. But if you're in a service industry and you don't have tourism coming and you don't have a job, it doesn't really matter if your tips are taxed if you're not getting tips. There's a problem. You just have to come to my state, talk to my service industry, talk to the individuals to see. They are not feeling better. No matter how much you and this administration start talking about how wonderful this economy is, they're not seeing it. It is a problem. And I'm asking, and I think some of my colleagues as well, let's fix it. There's affordability issue in this country. And we need to address it working together. Let's solve this problem. Let's not come up with facts. Let's not tell the American public something that they don't see in their own bank account. Let's just work together to figure it out. That's all I'm asking. I'm asking you to work with us. One final thing. It's not just my service industry. It is small businesses across the country who are being squeezed. We have seen it time and time again. The tourists. Listen, the facts are there. You can debate with me the facts, but the truth of the matter is many of our small businesses are being squeezed right now. Higher prices, absorbing higher costs. Some of them have had to shutter. The small businesses are the backbone of our industry. We've got to do a better job for them. I know my time is up. Thank you, Mr.
Thank you, ma'am.
Guess there was no.
Senator Tillis?
Thank you, Mr. Chairman. Mr. Bessent, thank you for being here. I'm going to give you a breather. I got a statement to make that I don't expect you to respond to. Mr. Chairman, I seek unanimous consent to put into the record the statement of various banking committee members with respect to the testimony of Chair Powell in his last hearing here.
Without objection?
Thank you. Mr. Chairman, that's a list of members who have indicated that they did not see criminal intent in his comments here before he was in the banking committee. The reason I brought this up is I had a reporter yesterday challenge me on why it was inappropriate for a sitting member to question a pending investigation. I never do that. But I told the reporter I did it because I was actually a witness at the alleged scene of the crime. The entire case against Senator Powell is encapsulated in his answers to questions before this committee. And now, including the chair, we have witnesses at the alleged scene of the crime we're disappointed with Chair Powell. I actually like Warsh as a potential chair, but we've all said that he was testifying and we didn't see a crime. And so I'm reminded, I don't know about you all, I watch Forensic Files. I've been watching it for years. And I'm kind of thinking about the scene would go like this. In spite of 7 witnesses, eyewitnesses saying no crime was committed, the prosecutor thinks otherwise. And then you hear that music and you cut to commercial. So I do think it's fine for me, being a witness at the scene of the alleged crime, saying that we got a majority of people on this side of the aisle that didn't think a crime got committed either. If we do this sort of stuff, I believe that future hearings for the Treasury Secretary and other members will be a lot like that Chappelle skit on I Plead the Fifth. They're going to be flanked with attorneys, and any time that they think that they're in the middle of a perjury trap, they're probably just going to say, I'll submit it to the record after consultation with my attorneys. Is that really the way we want oversight to go in the future? I don't expect an answer to the question, but I did want to get that off my chest, so I gave a more fulsome answer to that reporter who asked why it was that I was opining on an active investigation. Mr. Secretary, I'm thrilled that you're in the role you're in. I think you're a steady influence. I know that I've been public about criticizing certain president's advisors. You're certainly not one of them. But I do have a question. I actually ran into Senator Warren on the floor, and I said, my goodness, Elizabeth, I call her Elizabeth when we're talking on the floor. I said, you have convinced President Trump to put artificial caps on credit card rates. Good on you. Now, I'm going to do everything I can to kill it, but good on you. I think you even talked to the president about that, right? Mr. Secretary, what would happen if we put, well, I don't know where you are on the policy, but what would happen to, let's just say one area, asset-backed securities, if we imposed artificial 10% cap on credit card interest rates? And then if you have time in the minute, it's the only question I'm going to ask you. What would it likely do for credit card issuers who are still going to have to rate for risk in terms of debanking or unbanking or reducing access to a credit. So if you could get to the first one, which has to do with asset-backed securities, if you have time, you can go to the second one. Thank you.
Yes, I think we at Treasury are still examining what it would do to the asset security market. I think it would depend on the length. The president has called for 1 year. And we would also see if they were able to cut costs. Senator, because what's happened is we've seen a migration where credit card companies used to compete on APR, or the interest rate, to rewards. And the rewards go mostly to the upper end. So again, the profitability of credit card companies doesn't have to be hit if they concentrate more on competing on rates than rewards.
Work on the spread, but there's a lot of frothiness in there if we don't get it right. Thank you, Mr. Treasurer.
Thank you, sir. Senator Warner?
Thank you, Mr. Chairman. And boy, I didn't hear Senator Kennedy this morning, but Senator, tell us, you were like out Kennedying Kennedy today in terms of your presentation. That's a high bar. Mr. Secretary, good to see you. Mr.
We will not extend to you anymore.
Mr. I got to get my in a House move. I reclaim my time.
4 minutes and 38 seconds. Please use them.
You actually have a...
All right, Mr. Secretary, I got a bunch of stuff. One of the reasons I voted for you, encouraged others, was your support for CDFIs. One of the things I'm really proud of, Senator Crapo and I had an active bipartisan CDFI caucus. And last October, oh my gosh, Senator Crapo got 105 Republican members of Congress, including 8 Republicans on this committee, to say CDFIs, it's a good program. Yet the CDFI fund at $324 million in fiscal year 25, it's now February 26, and none of these funds have been released. And I know we've talked about this. Treasury, I know, works with OMB and some difficulties there. And we're hearing from CDFIs and how this is dramatically affecting. When can we expect those funds to get released?
Senator, I can't give you an answer. OMB will decide the terms and the timing of the CDFI apportionments.
Mr. Secretary, I got to tell you, you're the Treasury Secretary. You run this program. You had 105 Republicans say we need to get the money out.
Well, Senator, unlike
please.
the Federal Reserve, I can't print magic money.
Well, you sure as heck could call the OMB director and say this is a program that you have legal authority over. It is important. Matter of fact, as we talked about, President Trump, in many ways, I know he's forgotten this, but in 2019 became the godfather of CDFIs. When in the last Trump COVID package, he put $12 billion into this program. So I urge you, please, Mr. Secretary, pick up the phone and call. I know it would be difficult. I wouldn't want to talk to the OMB director either that much, but please talk to him and see if you can get those dollars released. It is so important. And I hope the 8 of my Republican colleagues will at least say, attaboy Warner on this one. Thank you, Mr. Chairman. I reserve my time back. I want to add, I know we're spending a lot. I feel like I'm in crypto hell. I know, Cynthia, I'm welcome to it, and God bless you. And you know, I think, and actually, and I really appreciate what you did on the stablecoins bill. And I think, you know, we got a lot of broad bipartisan support. At least many of us, I think all of my Republicans and many of my Democratic friends agree we want these products built in America. Crypto's here to stay, and we need clear rules of the road. And stablecoin was simple compared to market structure. But you have, one of the things that we see in crypto, and we are working our tail off. You can please, I think the chairman and I've spent, and Cynthia and others have spent more time on this than, anyway, I'm going to use up my time. But there are a lot of issues around national security that you have unique perspectives on with FinCEN, with the Secret Service. We sure as heck don't want to take away from prosecutors some of the tools they have to go against bad guys. You know, we've got to have some area to close down some of the gaps in DeFi. And again, there's bipartisan agreement on this, but boy, we need, I think we're starting to get some of the technical assistance. But if you can just make clear that this is a real problem, and you know, we'll deal with yields and rewards, we'll deal with a host of other issues, but these national security issues around DeFi are real, and we need to not create a set of rules that leaves huge exemptions and candidly takes away some of the prosecutorial powers that exist today.
Senator, I look forward to working with you on that. We've had problems, and historically, there's problems when the technology gets ahead of the legislation. So if we can work with you on the legislation it's for both OFAC and FinCEN.
Well, we love your technical assistance, and I think, Mr. Chairman and Senator Lomas, that you will be invited to our next round robin on that, and that may be later today or tomorrow or Monday. So
Good, and if you could convince some of there seems to be a nihilist group in the industry who would prefer no regulation over this very good regulation.
amen, brother. So weigh in.
I do.
Weigh in.
Early and often, Senator.
Weigh in. One last comment. I know my time is up. No, last comment. Hey,
Senator.
agentic AI, we got to come back and talk about. Agentic AI, huge possibilities with AI, but we've got to be careful about that. Thank you, Mr. Chairman.
Unbelievable. Okay. Senator Lummis.
Thank you. I'm going to pursue this line of questioning. Thank you, Mr. Secretary, for being here. You've had a chance to travel the world since you took the oath of office. Is China trying to use digital assets and blockchain to build an alternative to American financial leadership?
We don't know that for sure. There are lots of rumors of Chinese digital assets that may be backed by something other than the RMB, perhaps gold-based. We haven't seen that. They have a very large sandbox in Hong Kong, and HKMA is actively traveling the world looking at different mechanisms. So I would not be surprised.
Based on what you know now, what is your opinion about the importance of having clear rules of the road, market structure legislation in the United States?
Look, I think that it's impossible to proceed without it. We have to get this Clarity Act across the finish line, and any market participants who don't want it should move to El Salvador.
So, as a industry, what is the benefit to having this industry embedded in the U.S. economy?
Well, again, as I said, that there seem to be people who want to live in the U.S. but not have rules for this important industry, and we've got to bring safe, sound, and smart practices and the oversight of the U.S. government, but also allow for the freedom that is crypto. And I think it's a balance that is being worked out. It was worked out in the Genius Act, and I'm confident with leadership of people on both sides of the aisle that we can get clarity across the line this year.
Can you see a day when conventional banks and digital asset banking are offering the same types of products, giving each an advantage to offering a broader array of financial products to the American consumer?
I think that can happen over time, and we've actually been working with small and community banks to discuss how they can be part of the digital asset revolution also.
Among the things that have challenged us in these last months is concern by community banks and big banks that the stablecoin bill, the Genius Act, and market structure could cause a bleeding of deposits from small banks. What's your reaction to that concern?
Look, I've been a champion of these small banks, and deposit volatility is very undesirable because it is the stability of those deposits that allows them to lend into their communities, ag, small business, real estate, and we will continue to work to make sure that there is no deposit volatility associated with this.
Well, as an ag borrower, I commend you on that because I have borrowed from community banks on our ag operation for decades, and we're dependent on our community banking relationships in rural America to help sustain us and grow our businesses. So I very much appreciate that. I want to switch to digital asset taxation for just a minute. So among the things that I'm exploring, and the Senate Finance Committee has a package of bills that looks really good to me on digital asset taxation. But one of them that's kind of vexing, that I could use some guidance on, is the issue of de minimis with regard to especially Bitcoin and other digital assets that might be used as a means of exchange. So the issue is, will it be a capital gain or will it be exempt from capital gains when it's used as a means of exchange to purchase things? And if it's going to be subject to a capital gain, how do you calculate what the capital gain is? If somebody has a blended portfolio of Bitcoin, some of which were purchased when it was $300, some of which were purchased today at $75,000, and some of which were purchased a year ago at over $100,000. How do you calculate the capital gain? Do you have some thoughts about that, or who I could consult with in your shop?
It's a very complicated subject. We'd be very happy to have our Office of Tax Policy work with your team.
I'll be over. Thank you, Mr. Secretary.
We look forward to seeing you.
Senator Smith?
Thank you, Mr. Chair. Mr. Secretary, would you consider food and ag to be an important part of the U.S. economy?
Extremely.
Thank you. I agree with you on that. The U.S. food and ag sector is a massive economic force, contributing over $9.5 trillion, supporting over 24 million jobs. So, Mr. Chair, what I'd like to do is to submit a letter for the record. This is a letter sent on Tuesday to the ag committees in both the House and the Senate. It's signed by 27 former and current leaders in the ag sector from all across the country. It's a very bipartisan letter. Folks from corn, pork, milk, grains, renewable fuels, Farm Bureau, former USDA officials from both Democratic and Republican administrations.
Without objection.
Thank you. Secretary Bessent, as you no doubt know, and as this letter points out, farm bankruptcies have doubled. Barely half of all farms are profitable this year. The U.S. is running a historic agriculture trade deficit, which is a sharp reversal from record surpluses. And farmers are paying higher prices for everything, from healthcare to farm inputs, grocery, and utility bills. And I want to just read you a piece of this letter, which says, consider the impact of the China trade war on soybeans alone. In 2018, when the China tariffs were initially proposed, whole U.S. soybean exports represented 47% of the world market. Today, it's down to just 24.4%. The letter goes on. So, Secretary Bessent, my question for you is, when can farmers expect this turbulence and this chaos to stop and input prices to begin to stabilize or at least come down for them?
Well, Senator, as you know, input prices spiked under the Biden administration. And
Secretary Bessent, when can we expect?
Again, it's market-based. And as someone who, until the end of last year, was involved in the ag sector, I can tell you it was a record harvest. So it is a problem of abundance, but costs are up. We are working to bring the costs down.
Input costs are up, I believe, Mr. Secretary, in large part because tariffs are driving those costs up. And this is causing massive uncertainty and chaos in the farm sector, which is really hurting many farmers in my state and around the country.
Senator, it was very unfortunate that the Chinese decided to use our grape farmers, soybean farmers, as a pawn in trade negotiations. We have the administration's come out with a $12 billion package, and we have guarantees from the Chinese. They bought $12 billion of soybeans just since October. They are committed to buying, not 12 million tons. They will buy 25 million tons for the next 3 years to stabilize the market.
But what is happening for farmers in Minnesota is this constant on again, off again, tariffs on, tariffs off. It is chaotic, it is confusing, and it is destroying our markets. And so
it has nothing to do with the tariffs on.
Well, I think it has a lot to do, and these farmers, sir, believe that it has a lot to do with Trump tariff policy. I want to just, Mr. Chair, if I may, before I close, I want to link this conversation to some of the challenges that are happening in the ag sector and the larger economic challenges in Minnesota caused by the immigration action that is happening in Minnesota right now. Because the truth is that ag country is heavily impacted by this. This mass deportation plan is having a huge impact on the ability of farmers in my state to be able to get access to labor. And I'm talking about people who are here legally. And I know that my colleagues on both sides of the aisle that represent farm country understand you are hearing this from your farmers and ranchers as well. And it is having huge impacts on dairy and fruit and veggies. It is a major problem, not just in the farm sector, but all across my state, where just in Minneapolis alone, separate from agriculture, small businesses are losing an estimated $20 million a week because of customers just not being able to show up, being afraid, workers being unable to go to work because they're afraid of going out. The bottom line here, colleagues, is that this mass deportation plan was supposed to go after the worst of the worst, but what's really happening is that these poorly trained and aggressive agents are breaking families apart. They are hurting children. They are separating from their families. They are targeting and detaining and arresting people that have done nothing wrong, and that is morally reprehensible. And Mr. Secretary, it is reprehensible that you
Senator, your
would
time is
blame
up.
Alex Freddie, a U.S. citizen, for his own death, shot in the back by these federal
Senator,
agents.
Never
your
blame
time's up.
Thank you, Mr. Chairman. I'd like to just respectfully respond to my colleague and give you an opportunity to actually respond as well, Mr. Secretary. When I look back over the last 4 years of the Biden administration, it was failed policies for our agriculture industry. Number one, President Biden walked away from the trade deals and the trade gains that President Trump had gotten for our ag industry. Number two, with record high inflation, it hit our farmers worse than anyone. Both the war on energy of the Biden administration, plus the amount and the payment of equipment, plus the fact that input cost had literally been frozen, and the Biden administration failed to pass a farm bill, didn't even try. So here you had record high cost with energy, equipment, labor, inflation, and then you cap what they can make. And I don't remember one person on the other side of the aisle saying, let's move a farm bill. Let's help these people. Let's drive down energy cost. And so I would just like to say, Mr. Secretary, I feel like our ag industry is at the forefront of what we're looking at right now, and I would like to give you an opportunity to respond.
Well, one of the things I will respond to is that in my first meeting with my Chinese counterpart, the vice premier, I asked him, under the phase one purchase agreements, they were actually exceeded in 2020, signed in January 2020. The level of the agreement was exceeded every time President Trump has spoken with Party Chair Xi. He suggested he buys more soybeans, and slowly that tapered off. And we said, why? He said, Biden didn't enforce. Biden didn't enforce the purchase agreements.
Yeah, walked away from it. So speaking of something else we walked away from in the Biden administration was actually being tough on Iran when it came to sanctions. I appreciate the maximum pressure strategy that President Trump has gone back to. I'd like to ask you, what more can we be doing as we see us place pressure on the Ayatollah, who is no friend of the United States of America, and as we see what he is doing to the citizens of his own country in the streets? What more can we be doing to make sure that we are placing the pressure that we need to on the greatest state sponsor of terrorism, and that is the Ayatollah and Iran?
Well, what we can do at Treasury, and what we have done is created a dollar shortage in the country. At a speech at the Economic Club of New York in March, I outlined the strategy. It came to a swift and I would say grand culmination in December, when one of the largest banks in Iran went under. There was a run on the bank. The central bank had to print money. The Iranian currency went into free fall. Inflation exploded, and hence we have seen the Iranian people out on the street. We will continue monitoring all the partners, all the Iranian partners. The good news, Senator, is that we have seen, and we can see it with our fencing, We have seen the Iranian leadership wiring money out of the country like crazy. So the rats are leaving the ship, and that is a good sign that they know the end may be near.
I want to switch quickly to regulatory tailoring. It is obviously my belief that proper tailoring actually ensures that supervision is grounded in economic reality rather than subject ideology. Can you speak a little bit to the work that you and EFSOC agencies are doing to more properly calibrate our regulatory framework, whether it's capital rules or stress testing, or even adjusting to outdated thresholds?
Again, we are looking at all the thresholds. One thing that happened, too big to fail became too small to succeed, as Senator Haggerty said, and we don't want to see more of our small banks go under. What we want to see before the great financial crisis and this excessive regulation on the system was we would see about 50 new banks formed every year, by definitionally small banks, and we need to get back to doing that. We need to get back to small banks. I was talking to a community banker, 17 employees, 3 compliance people.
And last, I've got 30 seconds, but there have been claims made by the other side of the aisle, even tweets put out. I can provide that for you if you need that. But some pretty serious accusations, and saying, we have a tweet actually from the ranking member that says, and I want you to be able to correct the record if this is true, but essentially claims that the IRS has gutted enforcement and dismantled the DOJ or forced tax fraud investigators to actually stop doing their job. Does that have any legitimacy at all? Because I think that gives us all concern if that's the truth.
Complete sophistry. We've identified $10 billion in tax crimes, up 15% from 2024, $4.5 billion tax fraud, up 110% from last year.
Thank you.
Thank you. Senator Warnock.
Thank you, Chair Scott, and welcome, Secretary Bessent. President Trump promised that his administration would usher in a, quote, golden age of American manufacturing. In September 2024, at a rally in my home state of Georgia, Donald Trump said, quote, we're going to have a manufacturing boom. Secretary Bessent, we're now more than 1 year into the Trump administration. Yes or no? Has there been a manufacturing boom in the United States?
There are the beginnings of a manufacturing boom. We have intentions, factory groundbreakings, sir.
So your answer to that is yes, there's been a manufacturing boom?
That we are at the beginning of a manufacturing boom.
Okay, you and I could agree to disagree, but more importantly, manufacturers are telling us something different. Manufacturers are struggling because of the president's policies, and that's what they keep telling us, and the facts keep telling us. In fact, just this past Monday, the Wall Street Journal published this article entitled, U.S. Manufacturing is in Retreat, and Trump's tariffs aren't helping. I request consent to enter this article into the hearing record. Mr. Chairman?